Another Q&A event here at Digital Boost. I am Georgia Hatchis. I'll be your host today. Today, we get to, let's see, I've got a little hiccup here. Okay, sorry, I'm back. So I'm hosting today James Fuller from Henry. We're going to be talking about tax tips for sole traders. Kia ora, James. Welcome back. This is James's third or fourth time with us. Welcome.
Thank you, and thank you for having me.
So we are going to open up the Q&A for you. I'll probably hold off on those until the very end, but please come in, be a part of the conversation. I'm going to tap out here and make sure we're live streaming. So take it away, James.
Thanks, Georgia. Appreciate the invite to come back. So as Georgia said, we're gonna open up the Q&A. Do ask your questions. Genuinely, ask me anything here. But we'll leave some time for questions at the end. So if you fill the Q&A with your questions, Georgia's going to moderate and put a few questions to me towards the end. So I'm just going to share my screen here. So hopefully everyone can see that all right. So just by way of a brief introduction, my name is James Fuller. I'm the co-founder and CEO of Henry. And for those who don't know, Henry is one of the largest accountancies in New Zealand. We specialize in sole traders. We've been around for sort of about 5 or 6 years now, and we provide a mix of payment services, accountancy, and software to help sole traders run their businesses better. So we'll talk a little bit later about what Henry does, but really the main crux of what we'll be talking through today is how to get the most out of being a sole trader. And we're going to be arming you with some tax tips. So just as a starting point, let's just kind of run through what we'll walk through today. So there are some sole trader tax myths. We're going to talk about staying on top of your payments. I'm going to touch on business structure and insurances. Getting maximum value from your purchases. I'm even going to talk a little bit about saving for retirement. We're going to talk a bit about what Henry does, but I'm going to move through that fairly quickly and get to a Q&A section at the end where it'd be great to hear from you all. So hopefully it's nice and cozy where you are. I know it's pretty nasty weather in some parts of the country, but let's get ourselves warmed up with some tax myths. Okay, so I always talk about myself as being kind of a poster child for making tax mistakes. When we first started Henry back in 2016, 2017, I was really at the early stages of being a contractor and really didn't know how to run my business. So very quickly, we started to hear this idea of holding back 33% of your income for tax. And being a questioning person, I asked our accountant at the time, I said, well, is 33% actually my tax rate? And he said, well, I don't know. He said, I'll come back to you at the end of the year and I'll tell you what the tax is that you need to pay. And the thing that we worked out very quickly was, especially at those times, no one's tax rate is 33%. Your blended tax rate is you would have to be earning a lot of money to pay 30% or more in income tax. Yes, the top rate of tax is 39%, but you have to be earning a substantial sum of money to get over that amount. And what we found was that traditional accountants were giving it as a rule of thumb and saying, if you put away 33% of your income for tax, you'll be safe. When in fact, I realized that my tax rate would have been a lot lower. So what I was doing was actually, I was denying myself the use of my own money for long periods of time, which I could have been using to spend or save or run my business with. The second sort of trap I fell into was instantly registering a company as soon as I wanted to earn some income independently. I just thought you had to. And it turns out that's really not the case. If you are earning independently, whether as a contractor or a freelancer or a tradie, you do not have to register a company. You can trade as a sole trader. And so we found, very early on that this is just some advice that's given to people, regardless of what their business situation is, that they have to have a company structure. And obviously there are good reasons to have a company structure, and MB have a great tool for this. It's called the MB Business Selector. If you Google for it, you fill out a few details, and it gives you a bit of a view as whether you should be a sole trader or a company. And we always recommend that people go through that little quiz to work out what's best for them based on their situation. Just, to shortcut it, most of the time, people who require a company are usually employing staff. They might have large debts. They may have multiple directors or owners of the business. But it's really important to find out what structure is right for you, whether that's sole trader or whether that's company or something else. The third one here we hear quite a lot is that business expenses get refunded by the IRD. So this is a myth. We'll talk about this a little later, but the way that the business expenses work is that business expenses reduce the amount of your income that you pay tax on. So if you earned $50,000 in a year and you had $10,000 worth of expenses, you would pay tax on your income after expenses, so $40,000. So it's a common misconception that if you go out and buy something that is a business deductible, that you will be given a refund by IRD for the value of that. It's not the case. It's just reducing the amount of your income that you pay tax on. Often we see people go and make really wild, large purchases in the hope of significantly kind of gaining refunds from the IRD, and that's just not the way that it works. The fourth common myth is that you can't get access to KiwiSaver benefits. Often sole traders will sort of halt KiwiSaver payments or won't make contributions. And so we'll talk a little bit later about this, but as a sole trader, you can make voluntary KiwiSaver contributions. You can get government contributions, and it's really important to look after your retirement. Lastly, again, another common misconception is that if you're self-employed or a sole trader, mortgages and loans might be out of reach. This might have been true maybe 10 years ago, but these days, particularly, some of the big four banks here in New Zealand are really starting to change their opinion of sole traders in general. And actually, we have a lot of Henry customers who go on to successfully gain home loans, mortgages, even though they're self-employed. So again, these are just some myths that have been around for a little while that may not necessarily still be true. Okay, so let's talk about the fun stuff, tax payments. I know it's everyone's favorite topic, but it is important as a sole trader that you take care of this and you take an interest in doing this. It is a painful experience. We've all been there. Paying provisional tax payments is not fun, but the alternative of being chased down by the IRD is probably less fun. So the first thing we always recommend to people is to know their tax rate. And any accountant worth their salt will be able to tell you what your current tax rate should be. We always say to people, if you can't go to your accountant and say, based on what looks like I'm going to earn this year and based on my expenses I'm probably going to have, roughly what should my tax rate be? If they can't give you that answer, go and get a different accountant. This is a simple calculation. They should all be able to do this for you. The reason they don't want to is because it's actually just probably something they don't offer as a service for sole traders. It's something that very early on is worthwhile doing. You can work it out yourself, but if you've got an accountant, go ask your accountant what they think. And they might give you a range, but I can guarantee it's probably not 33%. Very important to know what payments you have to make. So that is income tax, that is student loan if you have one, ACC, which we'll talk a little bit about later. You may be registered for GST. These are all completely different taxes that you will need to pay separately. So usually when you look at over the course of a year, for most people who are in business, it's not more than a few months goes by before you have to make another tax payment. So there isn't an opportunity to hold on to all of the money for as long as possible, because the regularity of payments really starts to creep in. So very important that you know those payment timings. IRD does have a schedule on their website when you can look at the payments calendar, whether those are provisional income tax payments or GST periods. But it's very important that you know this. Even if you have a traditional accountant, they're probably not going to sort of baby you by phoning you up every time a payment is due. They're just going to let you know. This is when the payment is due. It is down to you to make those payments. And as we've always seen over the last few years, the number of people that come to us, come to Henry, and they bring with them huge amounts of tax debt when they've been with a more traditional accountant, is because they say, well, the accountant never made the payments for me. It wasn't something that was really their responsibility. They just told me what was owing. And if I didn't make the payments, they just carried on doing my tax returns year on year. So very important to do that. And that brings us to the next point, which is setting aside money whenever you get paid. And I will add an extra line to this, which is, and then not dipping into it later in the year. Now, I have done this before. I would not recommend it. Maybe we've all been tempted. We had an account we were running where we just kept dropping money, and every few months we would make a tax payment. And an expense came up, obviously a necessary expense. Everyone needs a new iPhone. And you say to yourself, oh, okay, maybe I've got that money there. Maybe I'll just dip into it. Once you get behind, it is very difficult to get back up to speed. And it took me a while. You spend a bit of that tax money and then you don't put as much away the next time you get paid, and it's a slippery slope. So setting aside money, just forget about it. The way I thought about it was best off going, it's not my money. It's the government's money. It's not mine to spend. I'm not going to deliberately try and avoid tax and end up getting chased down by IRD. I'm just going to put this away and I'm not going to think about it. And that's, we talk about a lot of things we do at Henry, which is making sure you're up to date on your payments. Just not thinking about it and just paying it away is sometimes the easiest way to not be tempted, like some of us are when times get a bit tighter. And lastly, make payments at the right time. IRD obviously accept payments throughout the year. If you do miss payments, you can be charged interest by IRD. There are interest and penalties. Again, number of people coming to Henry come with a sort of large amount of penalties from prior years. It's really important that you stay up to date and don't get behind. All those stats around sort of in the first 2 years. Some businesses are sort of really struggle. And they might even fail in their first 2 years. A high proportion of those are actually just tax irregularities. They haven't kept on top of things. They get big bills. They can't sustain the business ongoing. So it's always important to stay on top of this. And as anyone running a business, whether it's a side hustle alongside a salary job or whether it's your full-time gig, staying on top of your taxes is really important, and staying on top of those payments. You don't want to get behind. Okay, so let's talk about business structure and insurance. We talked a little bit earlier about business structure. When should you register a company? And we always have this conversation with people. I would check out that MB Business Selector tool. But the sort of conditions when you might need a company might be, as I say, you want to employ salaried staff. You can employ contractors as a sole trader. You can employ other self-employed people to work for you. You might need a limited company if you're going to take on large amounts of debts. So we'll talk a bit about liability in a minute, but if you're going to go out and get a large amount of kind of business lending, or you're going to take on investment, or you're going to have kind of multiple people with interest in your business, maybe shareholders beyond yourself, then a company structure is a sensible thing to do. But all too often we see people jump into having a company. I did the same thing. I liked the idea of having business cards. Shoot me, that's genuinely the reason. But you can have a trading name as a sole trader. You can name your business. You can have business cards as a sole trader. I wish someone had told me that. But all too often people jump into registering a company, and then they realize after the first year that not only are they doing their company taxes, they're doing their own taxes. There's a large amount of complexity. And they realize that actually they don't even need the company, because what most of them are doing is receiving money into the company and paying themselves, because they've got overheads, they've got rent, they've got kids. Very few people are sort of leaving money in a company and going, oh, I'll just leave it in there. I don't need that money to live. And so when you're a sole trader, obviously you don't have any of that complexity. And it's an interesting, could put this in the myth section, but there was this interesting idea of this sort of limited liability company. And a lot of people say, well, it's risky. I need to limit my liability. But what does that actually mean? And so, there have been some interesting cases over the last few years where directors of companies are actually being held liable for the debts of the company. And it makes sense, right? You can't start a whole bunch of companies and then run around town racking up a whole bunch of debts and then just wipe your hands and go, well, that was nothing to do with me. That was my limited liability company. Like, it just doesn't happen. So we talk to people a lot about whether you're a company or whether you're a sole trader, you're going to need some form of insurance, whether that's professional indemnity or public liability insurance. You're going to need to insure yourselves. You wouldn't have a company with no insurance, but you're probably, as a sole trader, probably going to go and get insurances as well, just to cover you in instances where something that you do has an impact on maybe a member of the public, or something that you've produced has an impact on one of your customers. That doesn't mean that you need to take out like a $10 million insurance policy when you're selling Beanie Babies. I'm showing my age, I know. But you really should think about what insurances that you need for your business, because there is no such thing as this kind of magical business structure that means you get off scot-free by not paying your debts. So again, be very aware of what business structure is right for you. You might want to get some professional indemnity and public liability insurance. And for the most part, that will cover you to a certain amount of liability. Going into this sort of company structure just to get limited liability may not be the right idea for you. What does ACC do for you? So for those that have been in business for over a year, you've probably received that ACC bill October. Usually they come out, surprise, it's an ACC bill. And everyone who's receiving one for the first time says, what is this thing? What am I doing? Hang on a minute. Haven't I already paid income tax, etc.? So ACC is a tax. It is a levy that is charged to you based on the kind of work that you do. And the more high risk your work is of you or being hurt in an accident, the higher your levy. So if you are a construction worker, you will pay more of a higher percentage of your income than, say, a journalist or a writer. The big thing to note about ACC is that by default, if ACC don't know what type of work you do, they will put you on a default sort of levy, which could be more expensive than you actually want to pay. So a lot of people get their first ACC bill and see they've been signed up for construction or something quite generic. And so it's really important to take a look at your ACC bill and be able to understand, do I actually do this type of work? And do I need to inform ACC that my work type is different, such that I can actually get the right kind of price, I suppose, for ACC? So again, when you get that bill through, it will be after you've filed your tax return. Usually it comes in a sort of October time. You'll just get it in the post or maybe via email if you've registered online. Do check it, because sometimes ACC do make mistakes, and it's really important to make sure you're on the right classification code with ACC. Again, that's the kind of stuff, Henry, that we do for people way earlier in the year. But hopefully that is something that is, that everyone can benefit from, is actually just knowing what kind of work you do and making sure ACC do as well. Because if you're putting money away for ACC, it might be the difference between paying $500 and $1,500, which is significant if you're someone that's trying to put money away throughout the year, because that could be the difference between, a family holiday and not. Okay, so getting the maximum value from your purchases. So again, IRD is not going to give you a refund for your business expenses, but also it's really important that you know what you can and can't claim. So before we start, just 3 really useful stats. So we run a quarterly survey that's independently conducted. It's called the Henry Sole Trader Pulse. And we gather some really interesting statistics from just sole traders. These aren't company owners. This isn't small enterprises. This isn't our own customers. This is independent in the market. And some of this is fascinating. So 50% of sole traders reported that they felt calculations were too complex around things like depreciation or share of home office. 41% indicated they weren't sure what they can and can't claim. And 37% said they can't be bothered with the admin time. So this is a big thing. We've all been there with the receipt cupboard of sadness on a Sunday, trying to go through and take photos of these receipts to store them. Most traditional accounting software makes it a painful process. So these 3 things are really important. When you think you're not alone in this, you're not the only one that finds expenses difficult, complicated, or burdensome. But there's some really good stuff that you can do that will help. So we mentioned it before, but I'm going to reiterate how expenses affect your tax bill. So the things that you buy for your business effectively reduce the amount of your income that you pay tax on. So your tax rate is set based on taking the total amount that you've earned across all sources. So that's going to be your salary job if you have one, plus your side hustle, plus any other income. IRD total all of that up, and then you tell them how much you've spent on your business, and they subtract one from the other, and then they set your tax rate for your income tax based on what's left. So if your overall tax rate is like 20%, you might be able to reduce your tax bill by 20% of the cost of something that you buy. And funny story, obviously, because we at Henry, we make it really easy for people to claim their expenses and get that tax relief throughout the year. We had one lady who, on a regular basis, we noticed, which is allowed for her home office, she was claiming her rolls of toilet paper. It is allowed. You can claim a percentage if you have a percentage of your home you use as a home office. You can claim the cost of your toilet paper. And this woman was making this expense claim regularly. And we got in touch with her and said, okay, your home office is 10% of your home. And so these rolls of toilet paper are costing you $10, which means you are putting in an expense for $1. And said you earn at a rate where your tax rate is, I don't know, 25%. That means you're getting 25 cents worth of tax relief every time you put this $10 expense in. And I said, your worth from an hourly rate is something like $50 or $60 an hour. I said, what you're doing is you're costing yourself money in admin time by expensing the toilet paper every time it comes up. So yes, it is going to reduce the amount of tax that you pay throughout the year. And yes, as my mother would always say, look after the pennies and the pounds will look after themselves. But seriously, if you're spending your Sunday nights taking photos of receipts of toilet paper, the net impact to your tax bill over the course of the year could be as little as a couple of dollars. And actually, if you spent that time growing your business, you could actually be significantly better off. So yes, know what you can claim. Yes, you can claim a portion of your home as a home office and claim toilet paper, but be conscious of how much your own time is worth. Very, very important thing for sole traders. So knowing what you can and can't claim as expenses is very important. Most traditional accountants will almost just let you go throughout the year, putting everything into your accounting software. And at the end of the year, will say, no, can't claim those things. Whereas actually what we prefer to do is play a more educational role, where if you try and add something in that is not claimable, we will tell you so that you don't continually waste your time for the remainder of the year putting those expenses in. Depreciation is something that comes up fairly often with people, as in how does depreciation work? When does it get applied? And at a simple level, depreciation is basically a fancy word for apportioning tax relief over a number of years. So if you buy something that's quite expensive, it's going to last for a few years, rather than getting all of the tax relief in the first year, we spread that tax relief. IRD asks you to spread that tax relief over 3 years or maybe 5 years. And it can be some complicated calculations. There are lots of different depreciation schedules for things like vehicles or tools or computers. And if you've got an accountant, they will be doing these for you. But usually they'll tend to do it at the very end of the year. They'll kind of apply it in some difficult calculations. Again, we like to do it a bit more transparently throughout the year so that you can actually see the relief that you're getting on depreciation as you go, rather than later on. And obviously what to expect at the end of the tax year. For a lot of people, that can be quite an anxious time. I know that it's difficult, even if you are having professional support. If you have a traditional accountant, they will probably come to you around mid-April, and they will say the tax year has finished as at the 31st of March. We will be filing taxes soon. Be ready, get prepared. And what that means is go to your receipt cupboard of sadness and finish your admin. It's going to be, it's going to be a painful time where they will come to you, they will review the contents of your accounting software or whatever documents you have, and then they will sort of throw that into IRD systems. And for a lot of people, the end result is always, as a self-employed person, is always going to be a tax bill, because you have earned money that you have not yet paid tax on. So self-employed people, which I almost, I think it's quite funny because people talk about getting tax refunds at the end of the year, and everyone's like, oh, my tax refund. If you're a sole trader, you are not going to get tax refunds. It's just not a thing. You get a tax bill. You have earned without paying tax. And so at the end of the year, your accountant will come to you and say, this is the amount of tax that needs paying, and this is the date that you need to pay it. And again, that is a it is a painful experience paying tax, not least just clicking the button in internet banking and seeing that money go. Again, when you use something like Henry and you're paying your tax as you go, you don't have that same amount of pain. But I do feel for people, because I used to do it myself, having to make a tax payment it doesn't feel good. It doesn't feel good for anybody. So at the end of the year, you'll have a tax return that gets filed for your income tax, and that'll take into account all of your income and all of your expenses. And you will receive a schedule of payments after that. But these are the times that you need to make payments. And it is, as we said earlier, it is on you to follow that schedule and to make sure you make those payments when they are required. Okay, so saving for retirement is something that a lot of people who earn independently just put to the back of their mind. They say, well, I don't get employer contributions to my KiwiSaver, so I'm not going to bother, or maybe I don't think I can do it. But it's really important to take an active approach to planning for your retirement. Even if the work that you're doing is, that fantastic Beanie Baby business that I've been going on about, they're going to be pretty big. If you are just doing a side hustle, you still should be putting contributions away towards things like KiwiSaver. And it's very important to build good financial habits. If you look at sorted.co.nz, which is one of our favorite websites, those guys are amazing. They talk about building good financial habits and being able to think about kind of planning for the future when it comes to being self-employed. And it's one of those things that, when you talk to, if you have the ability to talk to a financial advisor, they will always tell you to put a percentage of your income away every time you earn, not just for things like tax, but for savings and for KiwiSaver. And to be able to have kind of a set and forget is really important, because so often we see people who've been sole traders for a period of time, they come towards retirement age and they realize they haven't been contributing to something like KiwiSaver. What's really important is there is a member tax credit. There is a government contribution, aka free money, regarding KiwiSaver. If you make a minimum amount of payments into a KiwiSaver over the course of the year, the government will contribute free money into your KiwiSaver. And a lot of people don't know this exists. It's not just if you've got a salary job. If you are a sole trader, look up that member tax credit, look at what that minimum contribution is. I think it's got to be in by sort of July time. So set yourself a reminder in your phone. If you're not paying into your KiwiSaver on a regular basis, start thinking about it. And if you do get to the point of May, June next year and you haven't done it, just lump sum a payment into your KiwiSaver. There is free government money, people. I cannot stress this enough. Free money from the government if you contribute a minimum amount to your KiwiSaver. And the amount of people that don't know that, or know that and don't bother doing it, is just crazy. Like literally government cash machine, not literally, figuratively. So really important to take an active interest in preparing for your retirement. It might seem a long way away if you're just coming out of education and you're starting to earn a bit of money and you're like, actually, this is just a real strain on my finances. Putting something away could be $10, could be $15 a fortnight. Putting something away is better than nothing. And honestly, you will feel better investing in your future self, and your future self will thank you, And it's not one of those times when, nighttime James writes checks that daytime James can't cash. Like, it's not one of those when your future self hates you. Like, your future self will always be glad that you put a bit of money into a KiwiSaver or some form of investment. So take an active interest and just do it, and set and forget is the best way to do that. Okay, so we'll briefly touch on what Henry does for you. I've kind of talked a little bit about it, but effectively our service makes sure that all of your taxes and levies are calculated and paid as you earn. So that's GST, ACC, student loan, your income tax, that all gets taken care of. So you're always up to date and you know exactly what you have in your pocket is yours to spend or save or keep or do whatever you want with. You can use our mobile app and our desktop app to send invoices and quotes. You can raise your expenses, and our accountants will review your expenses throughout the year to make sure you get the right tax relief. So we'll automatically apply the tax relief to your income tax rate to make sure that when you get to the end of the tax year, there is nothing to pay, which is a great feeling when you have your tax return filed and it doesn't come with a bill coming back your way or a payment schedule. So the last thing we do, we allocate, you can set up allocations to savings or KiwiSaver or to anyone else. You can basically use it to plan your financial world. We have people who use our allocations feature to pay their mum, pay past tax debts, whatever that might be. It's all about empowering sole traders to focus on working on their business, not in their business. And plus, the fact that you can take a photo of your receipts as soon as you incur a purchase, you can throw that receipt away. We store it for you for 7 years. It means no more receipt cupboard of sadness, which, is honestly the relief that this is for so many people. I start to say to people, what are you going to do with that cupboard or that drawer when you've got it back? What are you going to do with that Tupperware or that thing you've got in the garage where you're just chucking things in a bin bag of receipts? Like, what are you going to do with all that space? But look, I won't harp on about that. Obviously, if you want to head to henry.co.nz, hnry.co.nz, you can find out more there. You can speak to our team on the live chat. So one of the things we do, we're not faceless software here. We actually have a team of people locally who are there to talk to you about what you can claim as a business expense, to help you understand tax. And even if you look at our website, we have a huge amount of free resources for sole traders, all about how to run your business, how to think about KiwiSaver, how to think about student loans, even how to price your services. I think it's really important that, even if you don't need Henry's services, there are free things on our website that if you're a sole trader could be hugely valuable. All right, I will pause there, and I'm sorry if I talk quite quickly. I get quite passionate about things, but I would love to throw it over to you guys for any questions you might have.
James, that's amazing. First of all of that information is so invaluable. I have to say, I'm one of those people. I hear tax, I hear finances, and my brain completely shuts down. And, my receipt cupboard of sadness was a garage full of receipts. It's quite maddening when I think about it. So tell me a little bit about how easy is it to sign up for Henry? For someone who hears taxes, finances, gets on a website and just freaks out.
Yeah, the service is designed for people like that. So there's no jargon, there's no complexity. The way the service works is everyone gets given their own unique Henry account to get their self-employed income paid into. And whenever your clients pay you, we calculate, deduct, and pay all of your taxes. And then obviously as your accountant, we represent you to the likes of IRD and ACC. So getting set up is really simple. It takes about 1.5 minutes, 2 minutes. You fill in some basic information, you get your Henry account, and then you tell your clients to pay you into that account. As soon as you get paid, we set up as your accountant. We run a health check on everyone. So first thing we do is look at your tax situation. Do you have outstanding bills? Do you have outstanding returns? We help make a plan with you. So if you do have things that you're sort of the skeletons in your closet that you're not really talking about and not trying to think about, we can negotiate with IRD and ACC on your behalf as your accountant to make sure we can get you back up to speed. So we always say to people, there is no bad time to sign up. It's very quick to do, and our team is always on hand to provide support and information if you have questions.
So would you fire your accountant then and then join Henry? Is that basically?
Well, we always talk about upgrade from your traditional accountant into Henry's accountancy. And as we were saying earlier, in New Zealand, we've got tens of thousands of people who use our service. That's everything from gig workers and side hustlers through freelancers, tradies, real estate agents, like you name it, relief milkers, you name it, we help them out. And genuinely, the thing that speaks most is when you look at our Google reviews, our Trustpilot reviews, this is a genuinely game-changing service for a lot of people.
Well, I've got some questions that are pouring in here. So let's see. Does Henry handle multiple rental properties and ring fencing regulations on top of sole trader income?
So depending on how many multiple is, the answer is yes. If you have a property empire and you have 10 rental properties, you might be better with a specific rental property accountant. We always kind of take each client on their merits and say, well, actually, what's the right thing for you? We would not want to say, yeah, absolutely, you've got 10 to 15 rental properties, Henry's right for you. It totally depends on the ownership structure of those properties. So what you'd be best doing is speaking to our team about that and describing your situation, and we'll always give you an honest view of whether Henry is right for you.
That's great. Yeah. And so, so we did talk a little bit about the photo capture capability. So the question here is, does the Henry app allow us to upload our receipts to a receipt store and make keeping receipts easy? I think that's a yes.
Yes, it does.
Yeah.
Yeah, so we store them for 7 years for you. They can be recalled anytime you need. And if you are ever asked by Inland Revenue for any more information, then we provide that for them. So in the event that IRD come and say, hey, can I have a look at the proof of this business purchase? We'll have that conversation on your behalf. You don't need to have that at all. So we have all of your records to hand and we maintain them all for you.
That's fantastic. All right. What reporting can you get out of it on a monthly basis?
Well, it's a good question. So you can get income and expenditure breakdowns. You can get, and that can be, you can time slice those however you like. You can get projections of your expenses. So if you are going for a home loan or a mortgage, you could go to Henry and you can ask our team for some home loan information, like a home loan pack, and we will provide your bank with a detailed breakdown of all of your income and expenses and a projection for the year. And the great thing about that the banks love is because you've got a Henry account and we've got all the receipts and all of the self-employed income has come through Henry, they know that's immutable. You know, when you come to accounting software or Excel or something like that, they are often a little bit worried, the banks, that people are just making stuff up and they're just putting transactions in and saying that's income, you know, and flagging an expense and these sorts of things. Whereas they know that because all your expenses have been checked by Henry and because that income has come through a Henry account, there's no fiddling the books. So banks are a lot more comfortable.
Wow. So, okay. So here's a question. Here's a good question. How easy is it to switch over from somewhere like a competitor? I won't mention the name.
We actually make that really simple. We don't ask for you to upload every single invoice you've had for the prior year. We think it's always best that people take an extract of that data and you can pass that through to us, but there's no need, you don't need to literally scan in all of your old invoices. It's a very quick process to get set up. And you don't have to do it on day one. What we say to most people is come in, start using the account, and then when you're transitioning across from other services, just take an extract. You can load all of your services like inventory. You can just load that as a CSV straight into Henry. So moving that data across is really quick, and we don't ask you to backfill everything for the last however long few months from April 1st.
Great. So carrying on from there, can you talk a bit about joining Henry partway through the financial year? How are previous expenses and income to date handled?
Yeah, so we ask you, our software will prompt you for that information after you've been paid for the first time. We kind of say, okay, well, you bring in that information for us. But if you imagine, you know, it was funny, when we first started, we would always talk about, you know, someone joining midway through the financial year, and you have this idea in your head, you're like, maybe that's December. But realistically, if you are at the 2nd of April and you earned some money and had some expenses on the 1st of April, you are already midway through the year. You know, and so our entire system it caters for the fact that you can join anytime, and we make the process simple. Either you're bringing 2 days worth of income and expenses, or you're bringing 2 months worth of income and expenses. We make the whole process really seamless. And again, our team are on hand to support if you need help in getting set up. And we always say, you know, people often just assume that we're faceless software and we don't have support, but we have a team of people here in Wellington who are, I think, have all braved the wet to get in today. Basically their entire job is answering your questions and getting you set up and making sure that information gets in nice and easily.
Yeah, this is amazing. All of these people coming through and saying like, great information, such good feedback. Let's see, we've been using Henry for almost a year now. We love it, but want to save more time filing in invoices. Are there tutorials on how to use Zapier with Henry?
Yes, I think there are. So we have an integration. So the question there is about our Zapier integration. So yeah, you can use, for context, Zapier is an online tool that allows you to connect 2 bits of software together and based on triggers. And so you can integrate Zapier with Henry, and what that means is you can plug other things into Henry. So if you've got a tool that could even be a Google Sheet, it could be something else, you can trigger something to happen in your Henry account that might be the creation of an invoice, for instance. I don't know if we have a video tutorial. We certainly have some help guides on that. But again, if you have a specific scenario and you're saying, hey, I want to make this bit quicker or easier, go talk to our team. That's the kind of fun stuff that they love talking about. And they'll be able to walk you through how to set that up. And genuinely, it's exciting for us that we can provide the quickest and seamless sort of invoicing experience. It's not about overcomplicating things for us. It's about removing complexity so that it's just really easy, so that people can reduce the time they spend on admin.
I mean, it sounds like it's a lot easier. Feels like something I need to be doing. I love making my life complicated. So
don't we all? And it's so unbelievable how easily we slip into this stuff, where you just don't realize how overcomplicated you've made something until someone else comes and like I've done it to myself, right? You make something quite complicated. I had a complicated spreadsheet of things, and I remember someone saying to me, you know, that could be a lot simpler, but you get so into the habit of dealing with that complexity that you just don't see it.
yeah, I mean, I yell at my husband every week, it's tax week, get out all the receipts. And we just start, yeah. So,
and then you start that panic of like, did I claim for X, Y, and Z? And, you know, is this claimable? And where's the receipt for that? Like, what did you do with the receipt? There's, you know, the toilet paper.
The toilet paper, the Beanie Babies, you know, all of it. Oh, here's a good question. I have an existing accountant as my husband has a company and we have rental properties. I'm starting my own business. Can I use Henry for my business without including these other businesses?
Yes, absolutely. And that's a really, really great question. So if you, and we always say this to everyone, so your accountancy as your sole trader, that is all part of the service. We will take you on as a client of our accountancy. However, if you have a traditional accountant who might be managing other affairs for you, and or you have a pre-existing relationship with them and you want to use Henry to pay and file your tax, to pay in all your taxes, to get all of your invoices and receipts in order, you can absolutely do that. And you can have another accountant file your taxes at the end of the year. You can literally grab a report out of Henry and you say, here are all of my expenses, etc. We have a few customers that do that, particularly in these situations where they have a spouse who also has multiple businesses, but for their own personal sole trader tax, they can use Henry without having to sort of bring everything in.
James, this has been amazing. I am going to let you go because you've offered so much of your time to us, and as I've said before, this information is invaluable to all of us, especially to me. I will say to me personally, I've really learned a ton, especially about the myths. I'm going to watch this again and take some more notes, since I was just looking out for everyone's Q&As here. If you didn't get your questions answered, James and his team over at Henry would be happy to answer any questions that you have. Of course, there's always us here, support at digitalboost.co.nz. Thank you everybody for tuning in. Just to plug also, on Thursday, we have a workshop here. We're going to have Stu Lees from Potent Marketing, and he's going to walk us through marketing on a shoestring budget, talking about finances this week. This is all good stuff. Thanks again, James. Thanks for coming back. It's really, really great to have a chat with you.
I love doing these, and you know, just want to thank everyone for giving up some of their time this morning to come and listen, and hopefully it was valuable. But as I say, free resources on henry.co.nz. Go chat to the team. You know, if there's anything else we could be of help with, just let us know.
Absolutely. Thanks, everybody. Matewa.